worsening crop conditions in the US, China buying more from the US, and Brazil opening its borders for US corn, US rice, US wheat, and US soy. Here to comment on that is Mike Zuzolo, President of Global Commodity Analytics, and he always brings his views on the overall economy and the impact for the farmer pocket. Here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Don't forget to subscribe and stay tuned. Mike, how are you today?
Doing well, Luís. Thanks for having me back. How are you doing?
I'm doing great. So we have talked a lot about worse crop conditions in the US. I saw that in Iowa there was 35 percentage points below on crop conditions, worsening crop conditions. So what are your comments on that?
Well, the trade, I think, has certainly finally balanced out its negative price mindset because of the crop conditions versus what the drought monitor has been projecting and what clients that I work with in the U.S. Corn Belt and Bean Belt have been projecting this year. And as you say, we've talked a lot about this. I don't think we're done in terms of adding premium into this market. I don't know if it's going to be all right away, though, Luís, because we really do have to think about, in the very short term, the delivery process for U.S. September futures. The Mercantile Exchange delivery for September corn, beans, and wheat, meal, and bean oil will start after Friday's close. I'm getting a sense that there is a lot of corn and beans from last year that have been put on basis contracts, and that those are not going to get rolled forward into new crop, and that they will come due on Friday and this next week or so. So that's the very short term. As we expand the horizon, I think the trade is going to have to contend with some welcome rains in parts of the bean belt. And so the soybeans especially are more likely to be benefited from any rains we get and any cool down in temperatures that we receive. That again is coming from my clients. We here in Atchison, Kansas, right on the Missouri River and about an hour north of Kansas City, we have seen our corn go from a lighter green, yellow color, kind of a normal pre-harvest color, to a dark brown in many areas that have been drier than normal. The heat this past week has really taken its toll on the crop. So this rain is not going to help very much corn west of the Mississippi River. It could help a little bit on the soybeans, but it's really going to help, I think, east of the Mississippi River if we get it, as long as it's not too much. And as we expand out further on our timeline, I think the biggest concern I have, and why I'm still hedging as we go higher in this commodity market, starting with the soybeans still, doing this because I'm nervous about China and the United States and their relationship as we head into the U.S. elections. I want to build a marketing plan and a risk management plan that addresses the possibility, the potential that China may create a problem for President Trump before the election in terms of canceling maybe soybeans or pork or something like that in agriculture if he starts to gain in the polls ahead of the election. So those are the things that I'm looking at. Very, very thankful that the market's moving higher. Very thankful that as the yields go down, the market is compensating my producers for that.
This weather talk is something that we have been talking for several weeks, that the crop could get worse. But I want to jump into trade as we have so many things to talk today. So China has announced that they would buy 40 million metric tons of soybeans. Do you think that could be a fact, or these are just talks?
I believe it's just rhetoric right now, Luis, and it's not just because of Brazil expanding their size of their acreage again this coming year and their profitability. I think that's certainly the major reason, or at least 50% of my opinion in that respect. But China and Russia have just signed a long-term agreement specifically related to soybeans. The Russians had been shipping soybeans to China up until about April, I believe it was, April or May. They halted those shipments because of the COVID, but now they're back on track, and they are progressing between them in a bilateral agreement for Russia essentially to become a new Brazil or a new United States. They want another supplier and another source, and it makes sense that they would do Russia because of their similar political and strategic relationship. And it also makes sense that they'd want a northern hemisphere source other than the United States. So I'm dubious that they will reach 40 million metric tons in the coming year. And I think that even if they do, it would probably not be very long that they'd be able to keep that and sustain that level, especially if prices go higher here.
Another thing that was announced this week is that Brazil has eliminated tariffs on several grains like rice, like wheat, and also soybeans. Well, internally, it's a problem for rice producers in Brazil because they are not very competitive like soybean producers. But the fact of the matter is that the oil crushers in Brazil are not getting the material that they need. It's too expensive, and the Paraguayan and the Argentinian soybeans is about the same price of Brazilian beans. How do you see that affecting the U.S. grower and the U.S. market?
Yeah, I mean, this is where we are still below cost of production on corn at the current price levels. We are just now getting to a profitable level in the soybeans. And so the bigger soybean acreage base, I would perceive as something that would continue into 2021. I think what I'm going to start talking to my clients about with this change in the tariff structure in Brazil is the number one thing to watch now is the price of Brazilian beans in Paranagua versus the price in the U.S. Gulf. And right now, as we speak, we're running at about $405 U.S. In Paranagua, and the price here in the Gulf is closer to $365, $370 a ton. As long as we keep that kind of a premium in Brazil and the premium in Brazil continues to pull U.S. prices higher, that keeps the rally potential in soybeans very possible. And I think even more importantly, it reduces the downside exposure in the soybeans in the near term. So what I'm getting at between my first comment and this last comment is I could see the market plateauing here and finding a little bit of resistance above the market. You know, we're just cents away, pennies away from testing the 949 lead month soybean high, and that's the 2020 calendar year high in lead month beans. I could see us probably topping out or trying to top out in that area and then waiting for more news related to the U.S.-China negotiations and also what the cash Brazilian bean price does, and then also whether we get needed rains here in the next 10 days.
And related to that, we also had the announcement of the Brazilian National Supply Company revising their own numbers and saying that Brazil actually produces over 10 million metric tons compared to what they were saying in previous years. So, in fact, they recognized that their numbers were very wrong. And I don't know what the markets in Chicago would feel about that because maybe a lot of people already knew that.
Yeah, I mean, I think the private estimates, I think, were probably higher than the Conab numbers, and they have been for quite some time. So I think you're right. I think this is a a confirmation of something the market already anticipated. But what I was wondering, and what I didn't know if you had a few comments for my clients that really enjoy this, because you hit the commentary on the Brazilian crop being forward sold and being tight, and that the Brazilians may have to bring in U.S. grains. That now has manifested itself. So I think there's a lot of people that appreciate your viewpoint from South America. And I guess this goes back to what's happening with the Amazon and with what's going on with clear cutting and the expansion of acres. Will this? I'm surprised the Brazilian government decided to say this because it kind of suggests they don't need to expand that much more if they're producing more than they already thought they were. So do you have any domestic or national mindset as far as whether that issue is becoming an issue domestically there in Brazil or not?
Well, Brazil still has a lot of surface to grow without touching the Amazon area. So I don't think that is going to be a huge limit for future growth, because we have a lot of frontiers yet to grow. Before we comment about wheat, who, as Mike is in the center of global wheat production, he's in Kansas, the center, one of the best soils to produce wheat in the world. We will talk about the energy market. I saw that I heard that there is a problem with canola production in Europe, and that has affected the demand for biodiesel in other places of the world. Do you see that as another point for soybean demand?
Yes, and I think that goes on top of the earlier problems that we faced in Malaysia and other parts of Southeast Asia when it came to palm oil and some of the other competing oils. I think that's something where we're in a phase here, I think, Luis, between the high volume of pork and poultry production domestically and globally, along with the tighter supplies of vegetable oils. If we can come out of this COVID and we can bring demand and consumption back at the restaurants and at the institutions that, like we've been talking about, I think the product markets are in a position where they can support a soybean rally, maybe one of the best situations we've had in 3 to 5 years when it comes to the product markets and the demand for products. So that's certainly something I want to be watching. I don't want to underplay the upside potential of this soybean market. A lot, though, rests in both livestock and soybean oil. A lot rests with our ability to come up with the vaccine and get our global economy and our food consumption back to normal.
Yeah, so finally, we are talking about wheat. I know you like this crop. You are from Kansas. You reside in Kansas, I should say, right now. And the Brazilian wheat crop is shrinking by 5%. The Argentinian crop is not optimal. Maybe they are not getting a full harvest. And you are saying about good hedge for hard red wheat. Do you think that wheat could be having better prices in the near future?
I think it should fundamentally, because what you just outlined, and if you throw on top of that the tighter supplies in Europe and the production problems in France and Germany, you do have a scenario now, even though we have a 42% stocks to use ratio on the world wheat stage, that number is probably below 40% as we speak, and the USDA hasn't found that out yet or hasn't come to that conclusion yet. So I think there is upside potential. And the other two reasons I think wheat has good upside potential has to do with the macroeconomic side and also with what's happening here in the state of Kansas and other key hard red wheat producing states. We have a pasture situation for, when we raise cattle and we raise the cattle on pastures and in grass. That it is one of the worst situations we've seen. It's probably the worst since I've been out here in Kansas for the past 7.5 years. And we saw that in the cattle on feed report here just last week. A massive amount of feeder calves went into the feed lots because there is no pasture. and there's not a lot of hay at this point either. So I think you're getting close to sowing that next wheat crop here in Kansas, Nebraska, Oklahoma, Texas. Really, the whole hard red wheat crop right now is very dry, and so it's going to be very difficult for producers to want to plant a lot of hard red wheat until they get rain. So I could see a very small acreage base again here in Kansas, Luís. Going back to the macro side of the equation, and this fits the kind of the puzzle with what's happening with the wheat right now, and the rally that we saw on Thursday, it was bigger in percentage terms than the soybeans. And I think it was mainly due to the Federal Reserve coming out essentially saying, we are willing to tolerate more inflation if it creates more jobs for the middle and lower classes. I think we have to take a step back and realize what that means. That means that they are not now going to pressure the markets into deflationary pressure anymore. And that is really a good thing for the commodity sector as a whole when it comes to the investor class, and that commodity market as an asset class. You and I have talked about this a lot, but this is a policy shift I don't remember seeing in 25 years of doing this.
And what that would mean for the marketing strategy?
Well, this would be where the dollar would be under pressure more instead of rallying more when the Federal Reserve comes out with their policy updates. And so that's where the commodity prices would probably find support at the Board of Trade. U.S. export markets for commodities would probably be better than what we've seen in the last 10 years. And again, this hinges upon the idea that we come back strong relatively soon from the COVID-19. This is why the Fed is willing to do this and make this massive policy change, because they can see a long-term problem with the unemployment in the United States economy if we don't come back. So I don't think they'll shift back to a deflationary mindset anytime soon because of how damaged the middle class economy has been over the last 15 or 20 years. So I'm going to do more investigating in it. We can talk about it again as time goes on, but to me, it's a very big deal.
What's the next level for wheat prices? $6 a bushel?
I'm going to come in and put some hedges in just underneath that in the soft red wheat. If we can get up to around 585, I will probably add some hedges there. And then if we can jump through the $6 handle, I'd pursue more hedges then as well. And you'd probably take about 50 cents a bushel off that for the hard red wheat, unless hard red wheat started to really find a lot of support and could get closer to parity with the soft red wheat, which I will be watching for here in the coming months.
Well, we are getting to the final part of the year, and I just saw a Conab, National Supply Company, projection, and they are increasing the Chinese demand for Brazilian soy, and that would reach 86 million metric tons next year. Do you see that the export would grow also in the U.S.?
I think that's going to be tough to be able to buy that much from both countries. I want to say that the USDA's total Chinese import number for soybeans is right around 99 million tons for the current marketing year. I see these numbers as really tough to meet and tough to match up with, Luís, at this stage of the game. I know that they're rebuilding their hog herd, but it's slow going there, and they haven't really gotten rid of African swine fever. They haven't, to my knowledge, found that elusive vaccine for African swine fever. So I think it's going to be tough with Vietnam and with some of the other Asian countries coming on really, really strong in livestock production for China to buy that much. I will keep watching it, but right now I'm skeptical that they will buy 40 and 89. That's, almost 130 million metric tons of soybeans from just these two countries.
So you are not that hopeful for Chinese demand next year?
I'm not saying they can't be better than what they were this year, and I'm not saying they can't be better than what they were in 2018. And that's good enough for me because that's a good demand number, but these numbers are very high in my opinion.
Your final thoughts, Mike?
Well, I think the biggest thing to watch here in the very short term is to see whether the rainfall in the United States comes, because we are in a critical situation for making that 50 bushel national yield here in soybeans, in my opinion, and in the opinion of my clients. And I would say in another 10 days or so, Luís, the calendar and the sunlight will start to work against us for the beans to be able to add bushels. And corn is pretty much done from what I can tell.
Mike Zuzolo from Atchison, Kansas. Thank you.